Good day, everyone. You are welcome to today's class. In our class today, we shall be taking the topic, taxation of specialized businesses. Taxation of specialized businesses. Sorry, have I shared these slides with you? Hello, can someone confirm if I have shared these slides with you? I don't know. No response. Hello, can you hear me?
No, sir, I didn't see the slide.
Okay. Please confirm if you have received it.
Yes, I received it.
Okay. Okay, thank you. So, under this topic, we will be discussing the following subtopics. So, before I move on, please note that this topic is divided into three. So, I have, divided into three parts. So, we have the part 1, 2, and 3. And we are starting with the part 1. So, hopefully, by tomorrow, because we won't be having class on Saturday, we should be done by this. We should be done with this topic, possibly. Okay. Now, under this topic, we'll be looking at some definition of terms, the taxation of real estate companies, agricultural business, foreign air and sea transport, banks, insurance businesses, authorized unit trust schemes, the circumstances when revenue can assess a company based on its gross turnover. We took this yesterday. We discussed it in our class yesterday while taking you on other bases of computing companies' income tax liability. Then what else are we looking at? Okay. We are looking at the taxation of enterprises in free trade zones, criteria for tax exemption of the profit of a Nigerian company in respect of goods exported from Nigeria. What else? Tax implications of the operation of the regulated securities lending transactions in Nigeria. Tax provisions of the Nigerian National Agency. Okay, sorry. We have the Nigerian Information Technology Development Act, Nigerian Information Technology Development Act, and then we also have the taxation or tax implication of the National Agency for Science and Engineering Infrastructure, NASENI Act of 1992. Then we look at the legal basis for the taxation of non-governmental organizations, NGOs in Nigeria, and the tax provisions of the Nigerian Police Trust Fund, digital economy, e-commerce, among others. Then we look at that of gas as well. So in short, these are the types of businesses. So if you look at the various businesses we have mentioned, they are specialized business, unlike the manufacturing we are used to, service industry or service companies, companies in airline, shipping, insurance, banks, they are referred to as specialized businesses because you notice that even the preparation of their financial statement is kind of unique, okay, specific to their industry. So I can just use a general format for the preparation of their financial statement. So we are starting with the definition of terms. So first, you need to know is, because we make reference to these words, okay, as we move forward in the class, and to limit your question on what is this, what does this mean. So it is important to look at some meaning of some term, to look at the meaning of some terminology or terminologies we will be using. So we have agricultural trade or business. This means any trade or business connected with one, the establishment of management of plantations for the production of rubber, oil palm, cocoa, coffee, tea, and similar crops. Then the cultivation or production of cereal crops, tubers, fruits of all kinds, cotton, beans, granules, and the likes. Then animal husbandry, that is to say poultry, piggery, cattle rearing, fishing farming, fish farming, and deep sea fish trawling. So these are the categories of activities, agricultural activities that, are considered as agricultural trade or business. So if, for instance, you're in the business of, fish farming, okay, you're into fish farming or cattle rearing, okay, so you are into an agricultural business. But if you are into the buy and sell of, maybe uh, maybe let's say beans or oil, palm oil, then you are into business of agricultural trade. You are into business of what? You are into business of agricultural trade. So I'm making you guys my co-host, Mary. I'm making you my co-host. So should I logged out due to internet instability? Please take charge of the class. Ogenechuko, I've also made you my co-host. And Sophia, I've also made you my co-host. So you guys should take charge should in case I'm logged out of my class. Okay, so the next thing to define is the primary agricultural production. Primary agricultural production. So this is into 4 categories. So we have the plantation. Okay, we have the plantation and we have the livestock. We have the forestry production, fishing production, and the like. So the first one is the crop production. Crop production comprises of the production of raw crops of all kinds. So it's just like you saying, yeah, producing raw materials. Okay, so the production of raw crops of all kinds, but excluding any intermediate or final processing of crops or any other associated manufactured or derivative crop products. Then for the primary livestock production, these mainly consist of, live or raw meat, live or raw poultry, fresh eggs, and milk of all kinds, but excluding any other associated manufactured or derivative livestock products. So the fish that the Asungai, use for their stuff, so will not be considered as what, as primary livestock. But from whoever, produces the fish, maybe for instance, the person is into fish farming, okay, and the Asungai has, gone to that place to get his fish. So to that person, is into what? Is into agricultural trade, but to the assumed person is not into what? Is not into agricultural trade or business because the fish has been what? Has been processed. Okay. So the fish has been processed, and those that are into all these geisha sardine that I used to get, okay, so they are not, they are not primary, livestock because they have what they have been manufactured. They have been what they have been manufactured. I hope you understand. Then also say with the section 11 subsection 4 of CETA, we have primary forestry production, which comprises of firewood, charcoal, uncultivated materials gathered, and other forestry products of all kinds, including seeds and saplings, but excluding the intermediate and final processing of timber and any other manufactured or derivative timber products. And then also primary fishing production comprising the production of fish of all kinds, including ornamental fish, but excluding any intermediate or final processing of any other manufactured or derivative fish products or derivative fish products. Please take note. So in general, we have animal husbandry, we have cultivation or production of crops, okay, crops and then timbers of various kinds. Then and also we have livestock production. We have livestock production. So um, then we have the establishment of or management of plantation for the production of rubber oil. So we move to that of the banks, security lending, uh, you know, and the like. So this for base lending rates, this is usually used, when there is need, for funding. So this means the weighted average of the cost of fund to any bank, weighted average of the cost of fund to any bank. Then an example of this is LIBOR rates. Okay, so London Interbank rate. Then we have cottage industry. This is an industry where the creation of products and services is home-based rather than factory-based. So if Mary, for instance, has a small farm in her compound, okay, and where she used for farming of, let's say, uh, maybe fish. Okay, so she's into animal husbandry, and then she used this fish to feed her family. Okay, instead of rather than for commercial purpose. So what she's doing will be referred to as what? As a cottage business, because it is a small business that is established for the purpose of feeding or caring for the family. Okay, so and then also we have foreign company, which is a company that is incorporated under any law enforced in any territory or country outside Nigeria. That is, it is registered with the Corporate Affairs Commission in another country other than Nigeria. Then also we have foreign loan, which is in relation to any foreign company. For instance, the multinational company we have, let's say MTN Nigeria and MTN South Africa. So if MTN South Africa lend money to MTN Nigeria, so the money received or the loan received by MTN Nigeria will be taken as what? As foreign loan, because it is a loan that is granted by that company with monies brought into Nigeria from any territory or country outside Nigeria, or any loan granted by that company in any territory or country outside Nigeria in a currency other than Nigerian currency. Please take note of that, in a currency other than Nigerian currency. So if the South African MTN is borrowing the Nigerian MTN money, then it should be borrowing the Nigerian emptying the money either in South Africa rand or the USD. Are we together? Then we have the real estate investments company (REC), where a company is duly approved by the Securities and Exchange Commission to operate as a real estate investment scheme in Nigeria. So such company will be referred to as a real estate investment company. I want to believe we all know what real estate is. You must have been hearing of this word. Have you heard of this before? Real estate? Mary?
Yes.
Okay. So then we have real estate investment scheme. So what's the difference between real estate investment company and real estate investment scheme? So usually a real estate investment company will be registered, uh, under a real estate investment scheme. Okay. So, and this means any company, trust, or such other such corporate structures approved and regulated by the Securities and Exchange Commission. And these companies are usually, or their primary business activity is to engage and invest in income-generating real estate assets or real estate-related assets, and is expected to distribute not less than 75% of its income within 12 months or receipt of the income. Okay, within 12 months of receipt of the income. So change this one to of within 12 months of receipt of the income. So, and that's the only reason why, in fact, the main reason why they will be granted exemption. So when we are taking that, you will see. So that's one of the conditions for granting, a real estate investment company in a real estate investment scheme exemption, tax exemption. So if they can prove it and show it that they have distributed nothing less than 75% of the income they receive within 12 months, okay, and they receive within 12 months, okay. So that is if you received a dividend from probably a real estate company and you're also into a real estate company, okay. So assuming you receive it on 1st January 2023, so it must be distributed between this day, okay, up to 12 months, that is 31st, December 2023. So you must distribute at least 75% of what you receive. Then what is a real estate? This is an income generating property consisting of land or building, including special purpose vehicle, holding such income generating land and building. So you may have a company, you may be into a manufacturing business, but then have a company that manage all your investment property, or let's say that manage all your buildings, lands, and the likes. So in that regard, probably the special purpose vehicle, that is the SPV company, lease out those assets to the main company, which is the manufacturing company, for the purpose of generating rental income. Okay, so, and it could also be owned by the company itself. But for it to qualify as real estate, it must be that the company is duly registered, for that purpose. Okay, not that you are registered as a manufacturing company, you are into manufacturing, and you say you are, leasing out land, building, and the like. So it's a good idea to have investment property and generating rentals from the investment property, but such should be treated as other income if it is not part of the primary business activities. I hope you guys are following. Then we have regulated securities lending transaction, which means any securities lending transaction conducted pursuant to rules made by the Securities and Exchange Commission, So what else do we have? Any other thing? Any questions before we move on? Any question before we move to the next slide?
No, for me. No question for me.
No. Okay. Thank you. Okay, so the first thing to take is the taxation of real estate companies. taxation of real estate companies. I've known what real estate is, or the real estate investment company, or real estate investment scheme. Okay, so let's look at the tax provision for this company. Tax provision for real estate company. The taxes that relate to real property transactions in Nigeria are as follows. The properties that relate to real estate transactions or real property transactions in Nigeria are as follows. One, we have companies income tax and personal income tax. Companies income tax and personal income tax. So for the companies income tax, tax is imposed on the profit of a taxable person. We all know. And taxable person could be what? What are the categories of taxable person we have? Hello. What are the categories of taxable person we have? Hello. You've forgotten that we have two types of taxable persons. So we have individual taxpayer and we have corporate. We have corporate taxpayer. Okay, so we have individual taxpayer, we have corporate taxpayer. So that's that. Then what else do we have? Okay, so then we have withholding tax. Withholding tax is also another tax that is, remember though withholding tax is not a type of tax, but it is an advance payment of companies' income tax and then personal income tax. So where the recipient of incomes are companies and individuals, the payer of any income is expected to withhold 10% and 5%. So remember yesterday while taking on the company's income tax, I made mention of franked investment income. Okay, so and where do we have franked investment income? We said frank investment income is when dividend has suffered tax at source. And what is the type of tax that dividend will suffer at source? So it will be withholding tax, which may be in respect of company's income tax or personal income tax. Okay, so and this, if it is a real estate company that is paying the withholding tax, it's paying to another real estate company, the withholding tax that it will deducted will be at 10%. But if it is individual, it will also still be at 10%. It will still be at 10%. So this 5% here is probably where there is service or maybe contract of supply. Maybe you are constructing a building, you are building an estate and you have people to supply you sand, gravels and the likes. So, if it is not an over-the-counter transaction, that is, if the supply is contracted, then it means you have to deduct withholding tax from the payments you are making to such a person. So in that case, if the person you are dealing with is an individual, the applicable withholding tax rate will be at 5%. But if the person you are dealing with is a company, it will be at 10%. I hope you understand this. But for dividend, remember, it is a unique tax rate and it's 10%, be it individual or company. Remember, we did that while taking on withholding tax. So another tax that companies in real estate are liable to is the tertiary education tax, which before the amendments of the Tertiary Education Tax Act through the Finance Act of 2021, the rate used to be at 2%. Okay, but now the rate is at 2.5% because it has been amended. It has been what? It has been amended. Please take note of this. It has been amended. So, and then we have value-added tax. For value-added tax, Real estate companies are required to register for VAT on commencement of business with the relevant tax authority. So, like companies in other sectors, all goods and services utilized in the real estate industry are to be invoiced and taxed at 7.5%. Remember, the Finance Act of 2019 reviews our VAT rate from 5% to 7.5%. So effective 1st February 2022, 2020, VAT are now charged at 7.5, 7.5% of the value of goods and services representing the value added tax. And this is expected to be remitted to the relevant tax authority. In this case, who is the relevant tax authority for the collection of value added tax? Hello, who is the relevant tax authority for the collection of value added tax?
Federal Inland Revenue Service.
The FIRS. Thank you. So then we have land use charge. So this is usually for residents of Lagos or property owners in Lagos State. So they pay this charge annually. So some other charges that are similar to land use charge are tenement rates and ground rent. So you can refer to chapter 12 for more details. Okay, so I know in other states too, there are various rates that are paid on acquisition of land or occupation of land in that state. So that's that. Then which other one do we have? And don't forget that for the tertiary education tax, yesterday I made mention of an exemption for companies that are classified as small company. So a small company with a gross turnover of 25 million naira and below is exempted from paying tertiary education tax, is exempted from paying tertiary education tax. So like other companies, like every other company, real estate company also pay tertiary education tax. So, and then for company income tax too, don't forget the classification of companies into 3 small, medium, and large company also applies to the real estate company. So companies in the real estate that has revenue turnover of 25 million and below, are exempted from the payment of company income tax. And then for personal income tax, remember the minimum tax provision, which means that whoever earns the national gross turnover or below, which is at 30,000 presently, is exempted from the pay as you earn, provision. Please take note of that. So meaning for companies in real estate, we have 20% to 30%, and for individuals, we have between 7% to 24%, isn't it? No be so. Hello, I am sleeping or what? You guys should talk now. Is the class bored?
Sir, we are hearing you, sir. Yes.
Okay, so we have stamp duty, and this is expected that it depends. We have a valorem and we have flat or fixed rates. Okay, so and all documents relating to any property or interest in property which are transferred or leased to any person must be stamped. So what are the documents? What are such documents that relates to real estate company? Oh yeah, now
I think power of attorney.
we have power of attorney.
I don't know, lease agreements. Is it part?
We have lease agreement.
Yes, sir.
We have CFO. Abi?
Yes, sir.
Then we have what again? We have deed of assignment. Abi?
Yes.
ETC. Okay, so all these documents, must be duly stamped. And the rates of duties is 75 kobo for every 200 naira of the consideration of certain real estate transactions like mortgage, wire conveyances, or other transfer or sale of real property is 75 kobo for every 50 naira. So for revision purpose, you can refer to the stamp duties presentation slide. So then we have real estate investment companies that are approved by SEC under real estate investment scheme. In line with the requirements of Section 105 of CETA as amended, real estate investment company, as defined by the Finance Act of 2021, means a company including real estate unit trust, including what? Real estate unit trust, including real estate unit trust, including real estate unit trust, duly approved by the Securities and Exchange Commission. The Securities and Exchange Commission rules of 2017, duly applied by the Securities and Exchange Commission to operate as a real estate investment scheme in Nigeria. Again, the Finance Act of 2021 defines a real estate investment company as what? As a company, including real estate unit trust, duly approved by the Security and Exchange Commission to operate as a real estate investment scheme. To operate as what? As a real estate investment scheme. So then we have the statutory provisions, which is the Securities and Exchange Commission rules of 2017 and other extant laws and regulations. Then we have the nature of business. What is the nature of business of a real estate investment scheme? These real estate investment schemes are usually investment vehicles which pool funds from investors comprising individuals, companies, pension funds, associations, etc. for investment in real estate as an asset class. For investment in real estate as an asset class. So real estate investment schemes are usually established to acquire. They're usually established to do what? Acquire, develop, and hold portfolios of real estate assets, and do not generally hold single assets. So what are the portfolio of real estate assets? We have land, we have buildings. So what else? So the land could be sale of land, So they may hold land for capital appreciation, and they may hold it as inventory, that is for immediate sale. Then buildings, the same thing as buildings. It may be, held for rental purpose or for, capital appreciation. Okay, so they primarily engage in and invest in income generating real estate assets, or real estate related assets. So some real estate investment schemes are structured to invest in specific property types, whilst others focus their investments based on geography, location. So what are the categories of income for these real estate companies? The categories of income for these real estate companies are rental income, which may be from lease, building lease or land. Then we have dividend from another real estate investment income. So, to diversify their portfolio, some of these real estate, company invest in another real estate company, and they, receive dividend as the compensation or reward for their investment, return on their investment, ROI. So in that case, the dividend they receive from this another real estate investment company will be considered as frank investment income if it has suffered withholding tax at source, and it will be exempted from further tax. It's exempted from tax if at least 75% of the dividend was distributed. They will have gains from disposal of assets and others, such as fees, commission, and other income not related to the real estate investment scheme. Then we have the how do we tax these various income we listed? So to tax this income, to start with, let's take dividend and rental income, which is most likely to be directly from the primary business activity. So in line with Section 19 of the Companies Income Tax Act, as amended. This section relates to dividend as the basis for computing companies' income tax due to no total profits or total profits are less than the amount of dividend paid. So rental and dividend income made by real estate investment company distributed to its shareholders under a real estate investment scheme are exempt from Section 19 of SITA. Remember, we did the Section 19 of SITA yesterday. Remember what Section 19 subsection 1 says and what Section 19 subsection 2 says. So the Section 19 subsection 2 is basically on the exemption. So and one of the companies that are exempted is this real estate investment company. Can you still remember? Hello, can you still remember? This is something we did in class yesterday.
So I not get your question.
Yesterday we concluded the computation of companies' income tax, Abi, and in that yesterday class, we discussed the normal basis for computing companies' income tax and other basis of computing companies' income tax liabilities, isn't it? So, and part of the
Yes,
other basis is the dividend basis.
Yes.
Is that correct?
Yes,
And
sir.
the section, the law that back this is the Section 19 of the Companies Income Tax Act.
Yes, sir.
And I can remember, that we have some exemptions, if you can still remember too. And one of the exemptions is that if the dividend is made out of retained earnings from prior year, Abi,
Yes, sir.
and we did some illustrations, you can recall. And
Yes, sir.
also part of it is dividend distributed to a real estate investor duly registered with the SEC under the real estate investment scheme. And the condition for this company is that at least 75% of their dividend must be distributed. In other words, the rental and dividend income distributed to shareholders in real estate investment scheme shall be deducted from the total dividend paid in order to arrive at the net amount of dividend to be considered for the purposes of Section 19 of this Act. So if the total profits for the company, okay, if the total profits from the company is, let's say, maybe what the company basically receive is dividend, okay? So the dividend it received this year now is, say, 10 million naira, and it redistributes, okay? It was redistribute this dividend, so at least 75%, so meaning that it redistributed 7.5 million out of this 10 million naira. So what the income that will be liable to tax will be 2.5 million naira. Okay, so that's what we are saying here, that the rental and dividend income redistributed to its shareholders shall be deducted from the total dividend paid in order to arrive at the net amount, on which, for the purposes of the Section 19 of SITA. So it is also important to state that for a dividend paid out of real estate investment scheme to be considered as a redistribution under the real estate investment scheme, again, I'm repeating myself, at least 75% must be distributed. 75% of the rental or dividend income, must be redistributed within 12 months. That is, must be done not later than 12 months after the end of the financial year in which the dividend or rental income was received, Please, and please take note of this. So another provision we have is the Section 23 subsection 1 of SITA. Okay, so dividend and rental income received by real estate investment company under the real estate investment scheme are exempted from further tax in the hand of the company. So the gross amount of each of these incomes is treated as non-taxable income because the income is regarded as received on behalf of its shareholders. So also you remember yesterday that we, under the other basis for computing our company's income tax, we did mention of the turnover basis, isn't it? And while computing using the turnover basis, we took the revenue from the normal business, we took revenue from discontinued operations, we also picked the rental income, interest income, and we exclude dividend, isn't it? So though initially we added the dividend, but we later deduct it as franked investment income. So, and again, to qualify for this exemption, it means that a minimum of 75% of the dividend and rental income received is redistributed as dividend to the shareholders. So if the company you are competing for is a real estate company, so you consider both the rental income and the dividend. Okay, but for this real estate company to qualify for exemption, it means that a minimum of 75% must have been distributed, must have been redistributed. So that's that. So in computing the assessable profit of a company, rental and dividend income will be deducted from the profit if already included in same. And any rental or dividend income not distributed is chargeable to tax. Any rental or what? Or dividend income not distributed is chargeable to tax. So meaning if the company redistributes 100% of its dividend and rental income during the year, so it means it will have no what? It will have no tax. It will have no tax payable. So that's what that means. Then also we have section 24 subsection L and K of CETA as amended. Here we are, what this section is saying that dividends or mandatory distributions made by real estate investment company to its shareholders under the real estate investment scheme are allowable deduction for tax purposes. Given the fact that dividend or mandatory distribution made by real estate investment company to its shareholders is an expense relating to an exempt income, it shall not be allowed as a deduction in computing the company's assessable profits. Section 19 and section 23 are talking about the exemption of their income, which is dividend income and then rental income from companies' income tax. So if we are exempting these income, or incomes from tax, so it means that any expenses incurred in generating this set of income or incomes should also not be allowed as a deduction in computing the company's assessable profit. So because the company may also have income from other sources of business, so the expenses incurred for generating the dividend income or rental income from the real estate business should not form part of those expenses from the other sources of business. I hope this is clear. Hope I'm not blowing too much grammar. Hello.
No,
Are we
sir.
together? So it is also important to state that rental or dividend income received by a real estate investment company will be treated as a taxable income if the condition stated in section 23 subsection 1 S of the Act is not met. So if they didn't distribute their rental income or dividend income during the year, then they will not qualify for the exemption in section 23 of CETA. Then we have section 80, and then okay, maybe that's all. Okay, we have gains from disposal. So what section 80 is saying, under section 80 of CETA, any distribution of dividend paid to a real estate investment company pursuant to real estate investment scheme shall not be subject to deduction of withholding tax. So based on this, such payment shall not be regarded as franked investment income unless when such payment is made to a real estate investment company, which is not under a real estate investment scheme, Please note this again. Any distribution or dividend paid to a real estate investment company pursuant to the real estate investment scheme shall not be subject to deduction of withholding tax. Shall not be subject to deduction of withholding tax. Based on this, such payment shall not be regarded as franked investment income unless when such payment is made to a real estate investment scheme. Then we have section 80 subsection 5(6). of CETA as amended. A real estate investment company is expected to withhold tax at the rate of 10% and remit same to the relevant tax authorities when a distribution or dividend is paid, except such shareholder is a real estate investment company under a real estate investment scheme. But where such shareholder is not, a real estate investment company under a real estate investment scheme, then there should be deduction. Okay, so the real estate investment scheme company paying the dividend or rental income was what we told 10% and remit same to the relevant house authorities. Gain from disposal of assets, fees, and other income not related to real estate investment scheme. So these incomes are not tax exempt like rental income and dividend income. So they are taxable in accordance with the provisions of the relevant tax laws. They are taxable in line with the provisions of the relevant tax law. Are we together? So, any questions? Question? Question time, no question. Hello? Okay. Hello, are you guys there?
Yes, I'm here, sir.
Okay.
Yes, sir. Yes, sir.
Yes, sir, we're here.
Okay, so you guys do not have any question for me. So we move. So tax provisions relating to agricultural business and primary agricultural production. Tax provisions relating to agricultural business and primary agricultural production. So agricultural trade or business is defined as any trade or business connected with the establishment or management of plantations for the production of rubber, oil, palm, coffee, tea, and similar crops, the cultivation or production of cereal crops, fruits of all kinds, cotton, beans, granules, shea nuts, beanites, vegetables, pineapples, bananas, and plantains, animal husbandry, that is to say, poultry, piggery, cattle rearing, fish farming, and deep sea fish trawling. Okay, so what is primary agricultural production? What is primary agricultural production? So I made mention of this earlier that it is classified into three, no, so sorry, four rather. So it is divided into four. One, we have the primary crop production, primary livestock production, we have the primary forestry production, and primary fishing production. So for the primary crop production, it includes raw crops of all kinds, but excluding any intermediate or final processing. So for each of these, they exclude what? They exclude any intermediate or final processing or associated or any manufactured or derivative products, any manufactured or derivative products. So for the livestock production, it includes raw meat, live or raw poultry, fresh eggs, but exclude any other associated manufactured or derivative livestock products. Then we have for forestry production, which includes production of timber of various kinds, such as firewood, uncultivated materials, but excluding intermediate and final processing of timber and any other manufactured or derivative timber products. And then also we have primary fishing production, comprising of fish of all kinds, including ornamental fish, but excluding any intermediate and final processing of any other manufactured or derivative fish products. And I made use of an example earlier between someone into production of catfish, okay, and the barbecue guy, okay, they are soon, person. So the roasted fish is quite different from the live fish, isn't it? So the roasted fish is not qualified under the primary fishing production, okay, but the live catfish, okay, is qualified. The livestock itself, okay, is what is qualified under the definition of primary agricultural production. What are the incentives available for companies in this industry? For small and medium-sized companies engaged in the primary agricultural production, they shall be granted. I think I mentioned this, was it not yesterday or the Saturday class, that for small and medium-sized companies in agricultural line, okay, their pioneer status is for 6 years, though they will be granted an initial period of 4 years and additional period of 2 years upon application, subject to satisfactory performance. And another incentive for them here is that they have reduction in the import duty on tractors from 35% to 5%. So to enjoy these tax incentives, these companies are expected to apply to the president through the Minister for Trade, Industry, and Investment. Are we together? So that's all on taxation of agricultural trade or business. So we still have time now. So any question before we go? Question time. Hello. No question. I hope I have not been speaking to myself. Networking. Can you hear me?
Yes, sir.
Thank God I made you guys co-hosts. Otherwise, we have two types and two different recording. Okay, so any question? No question, Abby. It's like this topic is too simple. Abby? Okay, so we move to the next subtopic, which is the taxation of foreign air and sea trade or sea transport companies. Taxation of foreign air and sea transport companies. So under this topic, we have a lot of things to do. Categories of companies that are regarded or referred to as specialized businesses, as mentioned earlier, and which they have their statutory provision in the Companies Income Tax Act, is companies engaged in air and sea transport. So they have companies engaged in air and sea transport business in line with section 14. Then the section 15 has to do with foreign companies engaged in cable undertakings. Foreign companies engaged in cable undertakings. Then, so the basis of computing for both companies engaged in air and sea transport is similar to that of the companies engaged in cable undertakings. So also we have for foreign companies engaged in insurance business, life and non-life in line with section 16 of CETA, and the Nigerian companies engaged in insurance business, life and non-life, in line with section 16 of the Companies Income Tax Act, and then companies engaged in authorized unit trust schemes, in line with section 17 of the Companies Income Tax Act. So these are the topics we'll be treating between now and tomorrow. Then we look at some other specific provisions relating to specialized businesses. Okay, I didn't mention of banks. Okay, yes, that of bank is similar to that of a manufacturing company and the likes. Only that, their own source of income is quite different from the normal, revenue we all know, which is usually from buying and selling. Okay, so what are the incomes for foreign air and sea transport companies? Okay, please take note. Take note. Class don't start. Before we move to the incomes exempted, okay, please know that foreign companies engage in air or sea transport. I have a question. Genevieve,
Pass me the garlic.
Genevieve, you have a question. Genevieve, I can't
No,
hear
sir,
you.
no, sir. No, sir, no, sir.
Okay. So before we look at the exemption, for companies in foreign air and sea transport companies, please know that foreign companies engaged in air or sea transport businesses are accessible to tax in Nigeria in respect of their income derived from loading of passengers. I think now you will understand. I once asked you this question. Okay, so when will our income be said to have been derived from, brought into, Abi, received in, Abi, and what's the last one? What's the last one? We have four now. Oh, my country people.
Accrued in.
Thank you, Jerry. We have accrued in. So now, when income is received, or let me put it this way, derived from the loading of passengers, when it is derived from the loading of what? Loading of passengers, mails, livestock, mails, livestock, then what again? Or goods into an aircraft or a ship in Nigeria. So income from leasing, containers, non-freight operations, or any other incidental income liable to tax under Section 9 of CETA. So this is when the income of companies into air and sea companies, will be liable to tax in Nigeria. But exemption to this is when, uh, passengers, mails, livestock, or goods are loaded on routes outside Nigeria, but terminating in Nigeria. For instance, now passengers are loaded from, let's say, the United, Arab Emirates, let's say Dubai. Okay, passengers are loaded in Dubai and terminate in Nigeria. So they will not be, the foreign company will not be liable to tax in Nigeria. Okay. So they will only be liable to tax in Nigeria when they have derived income in Nigeria from loading of passengers, mails, livestock, and any other goods. And then when foreign air or sea transport companies are in transit in Nigeria, that is, they brought passengers, mails, livestock, or goods into Nigeria, but they are not terminating in Nigeria. Okay, so please note it. They didn't load in Nigeria, and they are not terminating Nigeria for transshipment or connecting flights. So maybe a flight is going to, let's say, maybe London, for instance. So it departs from maybe okay, guys. Yeah, welcome back. Sorry. the weather is somehow today, so my network is not stable. Hello, can you hear me? Hello.
Yes, I can hear you, sir.
Okay, thank you, ma. So the flights didn't load in Nigeria, but it's transship in Nigeria. That's for ship, or connect with another flight in Nigeria. So those people that are coming from Ghana, because of a contingency, blah blah blah, so they have to come to Nigeria and what drop their passengers, load them into another flight in Nigeria. So that's connecting flight. So this is the two exemption we have to the income of companies into the air and sea transport companies other than the Nigerian companies. So we have computation and assessment of profit liable to tax. Determination of profit or loss derived by a company, foreign companies in respect of loading of passengers, mails, livestock, or goods into an aircraft or a ship in Nigeria is based on either of the following method. One, we have the adjusted profit or depreciation ratio basis, and the other one is determined by the FRS on a fair and reasonable percentage on the full sum receivable in respect of the carriage of passengers, mails, livestock, and goods So if the aircraft loaded passengers in a country other than Nigeria, will the income from loading of such passengers be liable to tax in Nigeria? Eh? If a aircraft loaded passengers in a country other than Nigeria, will the income from loading of such passengers be liable to tax in Nigeria?
No.
No, thank you. So please note these two bases. This first basis is based on the self-assessment provision, while the second one is based on a fair and reasonable percentage. Okay, so and that's not a self-assessment, or let's say it's similar to best of judgment. Okay, so because the FIS has the discretion of what rate should be used, they have the discretion, to say, to determine the rate to be used. Okay, so if you are using the adjusted profit depreciation ratio basis, so this is what you will have. So this basis is adopted where the FIRS is satisfied that the tax authority of the foreign company's country of origin, computes and assesses a company which operates ship or aircraft on a basis not materially different from that prescribed by the Companies Income Tax Act in Nigeria. And secondly, the FRS satisfies as being applicable to a company in the air or sea transport business. So that's when the foreign company will be allowed to compute using this formula. But where the basis of assessing the company to tax in its own home country is quite different from that prescribed by the SITA, then the FRS will use a fair percentage of the full sum receivable in respect of the carriage of passengers, mails, livestock, and goods shipped or loaded in Nigeria. So using this formula, we have the adjusted profit ratio. That's the first step. Okay. So which is adjusted profit divided by worldwide income multiplied by 100%. So the worldwide income is also referred to as the global income. Okay, it's also known as the global income. So the depreciation allowance may also be given by your examiner, and it may also be referred to as the capital allowance. So the examiner may say that the company, the tax authority in the foreign company, assess the foreign company, in the same manner or as prescribed by the provision of the company's income tax act. So in that case, we'll be using the capital allowance given in the question. Otherwise, we have to do our depreciation ratio in percentage, using these bases. So in order to determine the assessable profits, capital allowances and consequently the total profit chargeable to tax in Nigeria, the Federal Inland Revenue Service applies the above ratios against the income derived by the foreign company from the loading of passengers, mails, livestock, and goods into an aircraft or ship in Nigeria. So this can be explained using a pro forma as does. We have our assessable profits. So these assessable profits will be what? Will be the global assessable profits. Okay, the global assessable profit. So you first have to determine the global assessable profits, and that's the reason why we are using this adjusted profit ratio and the likes. So having determined the global income, the global adjusted profits, to arrive at the adjusted profit ratio. So it is that adjusted profit ratio that you use to multiply the income received in Nigeria to get the assessable profit of the Nigerian income. Are we together? Then you do the same thing for the capital allowance to arrive at the income tax payable in Nigeria, or the total profit liable to tax in Nigeria. So I think we have an illustration to practice that. So who is reading for us? Oh yeah,
The statement of profit and loss of the foreign airline, Ethiopian Airways Limited, for the year ended 2013 is as
hello, I can't hear you.
income from passengers
Hello,
flight in Nigeria, 300,000. Hello, sir. Hello, sir. Hello. Income from passengers flight in Nigeria, 300,000.
hello,
Hello, sir. Hello.
hello, can you hear me?
Yes, sir.
Hello, can you guys hear me?
I can hear you, sir.
Yes, sir. Can
Maybe
you?
I should read it myself. Mary, I barely hear you. Let me read. The statement of profit or loss of a foreign airline, Ethiopian Airways Limited, for year ended March 31st, 2013 is as follows. We have income from passengers freight into Nigeria, income from goods loaded into aircraft in Nigeria, income from passengers loaded and flown out of Nigeria, income from goods loaded into aircraft on other routes, less salaries, depreciation, other disallowable expenses, net profit for the year. And then we have these notes also. We are giving the following additional information. The FIRS is satisfied that the tax authority in Ethiopia computes and assesses tax on similar basis with Nigeria and has received certification of the appropriate ratio. So it means that the FIRS agrees with the tax authority of Ethiopia, and because this tax authority assesses tax on similar, basis with the Nigeria tax authority, and also the tax authority has agreed that the depreciation charge in the accounts can be granted in lieu of capital allowances. So it means we may not be doing any depreciation ratio as a percentage of worldwide income. So, and any other information? Okay. Salaries and other expenses include deposit for a new VC-10 aircraft. So this is a capital item. Then also we have payment of 24,000 naira to Nigerian Airport Authority for the use of the VIP lounge at the new Muritala Mohammed Airport by the airline's first class passengers. This is also another disallowable expenses. And then we have payment of 12,000 naira. Payment of 12,000 naira as rent for accommodation used as transit flats by the airline's crew. So you have to compute total profit for Nigerian tax purposes and income tax payable by the airline for assessment year 2014. For assessment year 2014. So now, out of these four income, can someone tell me the income that is liable to tax in Nigeria? Out of these four income, which of these income is derived from Nigeria? Hello?
Income from passengers flights into Nigeria.
Income from passengers flights into Nigeria. Abi? Is that what you say?
Yes, sir.
Yes, sir.
No, it can't be this. You've forgotten the definition. Is it income from goods loaded into aircraft in Nigeria?
Yes.
Okay. Then which other one?
Income from passengers loaded and flown out of Nigeria.
Then which other one?
That's the end.
Okay. So that's the two income that we have. Okay, so now these are global income. Abi? These are the worldwide income is 1.2 billion naira. Then the salaries and other expenses, we were told that it included the deposits for a new VC-10 aircraft, that was 80,000 naira, and payment of 12,000 naira as rent for accommodation used as transit flats by the airline's crew. Okay, so let's pick up our writing materials. So let me add blank slide. So what's the name of the company? I believe we all have these slides with us. Ethiopian Airways Limited. So what are we have to do? A, total profits, computation of total profit for Nigerian tax purposes. Computation of total profit for Nigerian tax purposes for 2014 assessment year. For 2014 assessment year. So give me 2 naira column. Please, it is important that you include the heading of your computation, the name of the company, and the title of what you are computing. And also remember to put your whether it may be in naira, or let me just say your denomination currency. Okay, your presentation currency. It is very important so that it gives it meaning, whether you are reporting in numbers or you are reporting in currency. Okay, so this is A. computation of total profit for Nigerian tax purposes for 2014 assessment year. So the question is reported in millions or in thousands. So what's the first thing? We want to determine our global income. Abi? So our global income is easy now. It's easy to determine. So we added all the income together, and that's 1.2 billion. So let's just prepare our formats first. So we have our accessible profit. Accessible profit. So don't forget, this one is the Nigerian entity, Abi, or Nigerian income. Nigerian income. So then we less capital allowances, Abi, less capital allowances. Also Nigerian share, Nigerian share. So then we have our total profit liable to tax in Nigeria, total profit liable to tax in Nigeria. So now let's go and draw our workings. So what do we want to get first? We want to get our what's it called? Our worldwide income. Okay, sorry, our adjusted profit. So and how do we get so we want to do our global adjusted profit, global adjusted profit. So how do we do that? Our global adjusted profit, we come here, we bring in our global net profit for the year, which is the 240 million. Global net profit for the year, 240 million. Global net profit for the year, 240 million. Then what next? We are giving some non-allowable and disadvantages. What else do we have apart from the depreciation? We have what else do we have apart from the depreciation? So apart from depreciation, we also have other disallowable expenses, 40,000 naira. Hello, Kende, you have a question?
I'm trying to answer your question.
I can't hear you. It's like the place you are is not noisy or probably the network. So 40,000 naira. Then we have the deposits for VC. Deposits for VC, 80,000 naira. Deposits for VC, 80,000 naira. Deposits for VC, aircraft, 80,000 naira. So if you add all this together, what do we have?
480.
480,000 naira. So that's our adjusted profits. These are global adjusted profits. So to now compute our adjusted profit ratio, adjusted
Profit times
ratio.
times
what do
100
we
over
have?
worldwide.
We have adjusted profit divided by worldwide income multiplied by 100%. So what do we have?
That's 480 times 100 divided by 1,000. 1,200,000.
We have 480 divided by 120 million. We have 480 divided by 120 million. Is it 120 million or 1.2 billion? It's 1.2 billion. So I've taken up the last 3 digits. So what do we have? Multiply by
That's
100.
40%.
Yeah?
40.
We have 40%. We have 40%. So now let's come back to our calculation. So our assessable profit for the Nigerian income, so working stream. So assessable profit for Nigerian income. So what's our Nigerian income? Our Nigerian income is is income from goods loaded into aircraft in Nigeria 220, and income from passengers loaded and flown out of Nigeria.
That's 520.
So we have 220 plus 180. Abi? That's 400. That's 400. So our assessable profit to you what? Assessable profit
400,000
400,000.
times 40%.
Assessable profit equals to Nigerian income divided by adjusted profit ratio. Abi? So that's 400,000 multiplied by 40%. So what do we have? We have 160,000. Abi? Am I correct? We have 160,000 here. So we have 160,000. So capital allowances, we were told in the question that the tax authority has agreed that the depreciation charge in the accounts can be granted in lieu of capital allowances. And what's the depreciation charge? 120.
120.
120. So with less depreciation charge, 120,000. So what do we have? So the total profit liable to tax in Nigeria will be 40,000 naira, isn't it? It will be 40,000 naira. And B, what are we asked to do in B?
To
B, we
compute
are
the
asked
income tax
to
payable.
for the airline assessment 2014.
Mm.
So income tax payable for 2014 assessment year. So we have total profit. We have total profit. So what's our total profit? Nigerian, Abi? Our total profit is 40,000 naira, Abi? That's our total profit liable to tax in Nigeria, Abi? 40,000 naira. Then we have our CIT, Abi? CIT at 30% of
30%.
taxes.
That's
That's that.
12,000.
That's 12,000 naira. So that's the answer. Now, this company, unlike every other company, okay, they don't pay education tax. Do you understand? They don't pay what? They don't pay education tax. So we are not computing education tax for them. You know, like the format we used yesterday. So we had to compute our education tax, but in this case, we are not computing education tax. So that's that. So I know you may want to ask that in the format, we were asked to compute depreciation ratio. Okay, and I've mentioned the reason why we may not compute depreciation ratio. That since the FIS agreed with the company that the depreciation charge should be adopted as capital allowance. Okay, so there is no need to compute depreciation ratio. Instead, capital allowance shall be the amount of depreciation we have in the question. That's what we use, 120,000 naira. So using the second method, this method is only used where the FIRS is not satisfied as to the conditions listed in the method one. And what is the method one? What is the method one? Hello? What is the method one? Hello? What is the method one? I can't hear you. Hello, can you hear me? Hey, hello, can you hear me? Sorry. So what's the method one? That's what we just did now. What's the method one? Eh? Hey, Mary, I can't hear you. Anyway, the method one is adjusted profit ratio we just used. Okay, so the assessable profit of the company in respect of income derived from Nigeria is shown below. Okay, so we have income receivable in Nigeria, and we have the assessable profit, which is the income receivable in Nigeria multiplied by the fair percentage as determined by the FIRS. So you can see that it's still similar with the one we did here. Abi, it's still similar with the one we did here. So only that we don't need to go through all these routes, okay, because the FIRS is using a fair percentage. So the percentage will be given, okay? So and once the percentage is given, you just apply it on what? You just apply it on the income receivable in Nigeria. You apply it on the income receivable in Nigeria. So that's how you get the total profit on which you apply the applicable tax rate. So then we have minimum tax. But before we go, other points to note is that where method 2 is used, the foreign company shall be entitled to require that its assessment revised and recomputed on the basis of method 1. Okay, so if the request in A above, okay, the request that is of using the method 1, okay, will be valid only if made by the company within 6 years after the end of the relevant assessment year to which it relates, and on production from its home country's tax authority of appropriate certificate to the satisfaction of the Federal Inland Revenue Service. So in any case, the minimum tax payable by a company engaged in air or sea transport business shall not be less than 2%, shall not be less than 2% of the full sum receivable in respect of carriage of passengers, mails, livestock, or goods shipped or loaded into an aircraft, into an aircraft in Nigeria. So the full sum receivable should, however, exclude taxes such as VAT and other levies such as airport or passenger tax, which are collected by the airline on behalf of others. So those ones will not be included. They will not be considered as income. So it means that in the case of these Ethiopia Airlines, okay, so if you are doing 2% of the income received in Nigeria and compare with this, because that we are saying that the tax that the airline company will pay will not be what? Will not be less than 2% of the full sum receivable. So let's do 2%. 2% of the Nigerian income is how much? 2% multiplied by 160,000 naira. How much do we have? How much do we have? 2% of 160 million naira. That will give us how much now? Hmm? 2% of 160 million naira is how much?
3.2 million.
That's 3.2.
3.2 million. Abi?
Yes, sir. Yes, sir.
So 3.2 million naira. So based on minimum tax at 2%. So we have what? We have 3.2 million naira. So which one is higher? Which one is higher? So it means the tax authority will go for this instead of assessing based on the minimum tax. Are we together? So that's that. So the minimum tax provision as mentioned should not be less than 2% of the full sums receivable in respect of the carriage of passengers, mails, livestock, or goods shipped or loaded into an aircraft in Nigeria. Are we together? So that's all. In this class, we have discussed, we look at some definition of terms under the taxation of specialized business. We took the tax provision for real estate companies and real estate investment companies that are approved by the Security Exchange Commission under the relevant, provisions of real estate investment scheme. And then also we discussed the tax provisions relating to agricultural business and primary agricultural production. And lastly, we discussed the taxation of foreign air and sea transport companies. So let me give an illustration. So we should have another thing. Let me see if we can take taxation of foreign companies engaged in cable undertakings. Though, as mentioned earlier, it is similar to that of. Please let me pick up your writing materials. I want to dictate. So it is similar to that of what's it called? That of taxation of foreign company engaged in air and shipping business. So I am detecting. Are you writing? Okay, before I detail the illustration again, where a company is engaged in the business of transmission of messages, in the business of what? In the business of transmission of messages. What are the examples of companies in the business of transmission of messages? Transmission of messages by cable or any other form of wireless apparatus. This company is accessible to tax in the same way as foreign company engaged in air or sea transport business. Therefore, its profits, which are deemed to be derived from Nigeria, are from the transmission of messages through its network in Nigeria to places outside the country, outside Nigeria. And such cable messages originating from Nigeria are deemed equivalent to the shipping or loading of passengers, mails, livestock, or goods in Nigeria. So apart from these, all the other provisions relating to the taxation of companies engaged in the sea or air transport companies apply exactly the same way, okay? Applies exactly in the same way as to companies engaged in cable undertakings. Companies engaged in what? In cable undertakings. Okay, so please take up your writing material. I want to detect an illustration. If you are ready, let me know. Hello, can you hear me?
Yes, sir.
Are you ready?
Yes.
Okay. You are writing. Mary Limited. Mary Limited. Mary Limited is engaged in the business of cable undertakings in Nigeria. Mary Limited is engaged in the business of cable undertakings in Nigeria. Full stop. Mary Limited is
You know, I can't hear you. Your voice is not coming out properly. I can't hear you.
Mary Limited. Can you hear me now?
Yeah, it's better now.
Mary Limited. Mary Limited is engaged in cable undertaking business in what? In Nigeria. The company is registered with the Corporate Affairs Commission, in UK, the Corporate Affairs Commission in UK, okay, as a limited liability company, So its worldwide management account for the year ended 31st December 2022. Its worldwide management account for the year ended 31st December 2022 revealed the following. 1. Income from cable messages. Income from cable messages terminating in Nigeria. Income from cable messages terminating in Nigeria. 200 million naira. 2. Income from cable messages routed through Nigeria. 300 million naira. 3. Income from cable messages. Originating in Nigeria. Income from cable messages originating in Nigeria. 200 million naira. In total, we have 700 million naira. This is our global income. Less salaries and wages. We have 100 million naira. We have depreciation, less depreciation. We have 120 million, less overhead expenses. We have 50 million. We have purchase of equipment. We have purchase of equipment. We have 39 million naira. We have 39 million naira. Then we have general. Okay, so let me bring this. So what else can I add to it? Okay, so let's say we have we have penalties, 5 million naira. Okay, so we deduct everything in aggregate, 100 plus 120, 220 plus 50, that's 390. And sorry, that's 370, and 270 rather. 270 plus 5 million, that's 275 million, plus 30 million, that's 3.5 million. So we have 340 million. Am I correct? So 340 million minus 700,000, what do we have? We have 486 million. Please punch your calculator to confirm. Hello, can you hear me? Hello, can you hear me?
Yes, sir.
Yes, sir.
Is this correct? Eh? Is this correct? Oh yeah, now. Is it correct? Hello. Anyway, if it is not correct, tell me that, sister. So you are writing note 1, additional information.
Hello, sir.
Additional information.
Hello, sir.
Ma?
Should be
Ma?
340 minus 7 million naira.
700 million naira.
700, okay. I'm
Hmm.
coming.
Additional information. Additional information, note 1. The Federal Inland Revenue Service is satisfied that the tax is computed and assessed in UK, the country of the foreign company, on the same basis as Nigeria. Mary, you can mute your mic. Mary, you want to say
That's
something?
386.
386, Ali.
Yes, sir.
So thank you. $386 million. So yeah, additional notes. Please be fast. The Federal Inland Revenue Service is satisfied that tax is computed and assessed. The Federal Inland Revenue Service is satisfied that tax is computed, and assessed on the same basis. Tax is computed and assessed on the same basis in UK, as Nigeria. Then note 2, the UK Tax Authority, the United Kingdom Tax Authority has certified the adjusted profit, and depreciation ratio, the adjusted profit and depreciation ratio allowance, depreciation allowance ratios, and then included in the overhead expenses are disallowable items totaling what? Totaling 35 million naira. Totaling 35 million naira. You are required to compute the company's adjusted profits. You are required to compute the company's adjusted profits. 2, determine the adjusted profits. Determine the adjusted profit ratio and depreciation ratio. 3, compute the total profit. And income tax payable. Compute the total profit and income tax payable in Nigeria. Compute the total profit and income tax payable in Nigeria. So please take this as an assignment. Okay, so I want you guys to submit it to me before the next class. Okay, so please submit this to me before the next class. Okay, so thank you guys for joining me in class today. We have successfully come to the end of today's class. So we'll be meeting tomorrow again by 5 p.m. Do ensure to make it to class at exactly 5 p.m. tomorrow. I wish you best of luck in your coming exams. Do have a successful day ahead. Goodbye.